I'm David Tassone, Principal of Solidi Wealth Advisors. Welcome to Solidi Snippets, where we make financial topics clear, simple, and easy to act on.
Today, we're going to take a closer look at mutual funds, one of the most popular ways to invest. So, what exactly is a mutual fund? Simply put, a mutual fund is a pool of money collected from many investors. This money is then used to invest in a variety of assets, like stocks, bonds, or a combination of both. It is managed by a professional fund manager who decides where to invest that pool of money. One of the biggest advantages of mutual funds is diversification. Instead of putting all of your money in one stock or bond, a mutual fund spreads out your investment across many different assets. This helps reduce risk because if one investment doesn't do well, the others can help balance it out. Here's how it works. When you invest in a mutual fund, you're buying shares of that fund. Each share represents a piece of all the investments in the fund. The value of your shares changes depending on how the investments perform. If the fund's investments go up in value, so do your shares. If they go down, your shares lose value. Now, let's talk about the different types of mutual funds. First, there are equity funds, which focus on stocks. These funds aim for growth, and they come with higher risk, but also higher potential returns. Then there are bond funds, which focus on bonds. These are typically more stable than equity funds and are often used for generating income. We also have balanced funds, which are a mix of stocks and bonds. They offer a middle ground, aiming for both income and growth with moderate risk. And finally, there are index funds, which are a bit different. Instead of being actively managed by a fund manager, index funds simply follow a market index, like the S&P 500. These tend to have lower fees because there's less management involved. Speaking of fees, mutual funds do come with costs. You'll often pay an expense ratio, which covers the cost of managing the fund. Some funds also charge a sales fee, called a load, when you buy or sell shares. It's important to be aware of these fees because they can affect your returns over time. In summary, mutual funds are a great way to invest if you're looking for a diversified, professionally managed option. They offer convenience and can be tailored to fit your financial goals and risk tolerance. But like any investment, it is essential to do your homework and understand the fees involved. Thank you for joining us on Solidi Snippets. I'm David Tassone, and at Solidi Wealth Advisors, we're here to bring you peace of mind to simplify financial decisions. See you next time.